Hi everyone, welcome to episode 2 of the Advanced Mortgage Solutions podcast. This is a podcast that assists people with their property journey, whether you're a first home buyer or a seasoned investor. We cover all topics. I'm your host Joel Sadler, and our mortgage expert today is Scott Miller, owner and founder of Advanced Mortgage Solutions. Scott's been a property investor for over 20 years, so he basically practiced what he preaches. He's had a professional background in logistics, management and finance. And when Scott passed his financial papers, he actually did with the best score in New Zealand. So this, technical knowledge plus real world experience means that he provides fantastic value and insights to his clients. And the podcast is a way for Scott and his team to really just give back information and help educate the New Zealand market, particularly focus on new home buyers in this current series. This episode is a second episode, and it covers a hot topic that is really on the minds of anyone buying property, really. But the focus today is very much on the first home buyers, and that is on the magic deposit, Scott.
Yeah. So it's a good subject to cover.
Yes.
Very good subject to cover.
100%. Now, tell us about, are there any grants out there, Scott, that, a new home buyer can tap into where they basically get free money or a subsidy from the government?
And you're right, it used to be a thing at the last sort of government change with the National coming in, a couple of years ago now, I suppose. They actually did away with the first home grant. There's still the first home loan and everything that comes along from the Kiang or Aura side of things, but the grant itself is no longer available, unfortunately. So it sort of leads your deposit down to savings, KiwiSaver, maybe assistance from parents. You might have to sell some shares or something like that if you've got a little investment portfolio going on. A lot of the people nowadays have a wee shares account, and which is a great thing because the share market was sort of locked out to most of us because you had to have a broker and all those sorts of things. So, we're seeing a little bit more of a diverse way of getting the deposit funds together, but the grant, unfortunately, it's gone.
Okay. Oh, well, so that's a shame in a way, but I'm sure as you've outlined some other options. Tell us about the Kiang Order. Who are Kiang Order, and what does that even mean? How does that part work?
Kiang Order, you and I, or maybe some of the older generation would know them as Housing New Zealand. They had a bit of a name change a while ago. And they have a product out there that certain banks have access to, so you can be a first-time buyer. That is reserved to first-time buyers with as little as a 5% deposit. There's some restrictions around that, but it's a very good product if you're finding that you're nowhere near the 20%, for example, or even 10%. But great product from the New Zealand government through basically Westpac, SBS, TSB, the Co-op Bank and Kiwi Bank. So they're the 5 ones that have access to it.
Right.
Yeah.
Right. So it's a good broad range, which makes it, gives people choice,
That's right. Yep. 100%. Yeah. Good product.
Okay. Yeah. And then you mentioned KiwiSaver briefly as well. Obviously, a lot of Kiwis, if not all Kiwis, have some sort of KiwiSaver running. Some people obviously opt out. I'm not too sure. Can you opt out of KiwiSaver these days?
You can opt out on a temporary basis. So it's sort of an opt out for 12 months on a rolling 12 months, but you'd have to renew it every 12 months. Once you're in KiwiSaver, strangely, you can't cancel KiwiSaver. So that's the weird thing about it.
Right.
Yeah.
Okay. And so how would so this is where it gets quite interesting for me. So I've got some questions around, how would someone go about releasing the KiwiSaver? And then if there's 2 people buying the property together, say, for example, marriage, civil union de facto, which means living together, can they both unlock their KiwiSaver to buy the house? How does that all work?
It's got
quite interesting.
KiwiSaver's been now around for, since 2007. So it's 18, 19 years old sort of thing. The pathways of getting your KiwiSaver funds out for the purposes of buying your first home is very well understood now. It's usually just a phone call to your provider to say, hey, it's Scott here. I'm about to buy my first home. Can you send me information to show that I'm eligible and how much I'm eligible for? 2 hours later, really, you receive an email saying, hi, Scott, this is from your provider. Hi, Scott, not only are you eligible, but this is how much you're eligible for. And at that stage, that's really
Oh,
all the banks need to sort of
yeah.
confirm the size of the KiwiSaver contribution towards your deposit. Yeah. Yeah.
Right. Fantastic. And was that
Mm.
available? Like, so if there were two KiwiSaver funds, could people unlock and use them to the same property,
Yeah.
towards the same property,
Look,
or?
as long as you're a
Mm,
first home buyer and you haven't used your KiwiSaver
yeah,
before, then you get access to your
yeah,
KiwiSaver. If you and I were to
yeah,
decide to buy a house together and I'd pre-owned and already used my KiwiSaver, that wouldn't stop you
yeah.
from using your KiwiSaver because it's still your first home purchase.
Uh,
So I
I
don't
see.
take your ability of using your KiwiSaver because I've already used mine. They see it on an
Yeah,
individual basis, and then they can be used either both as both it's their first purchase, or just a
yep,
single if it happens to be one person that it happens to be their first
right.
purchase. What a lot of people do get
Interesting.
mixed up on is that there's something out there called the second chance for your KiwiSaver. And it's a little
Yeah,
misunderstood because it sort of leads you to believe that you get a second chance to use your KiwiSaver funds a second time. And that's not the
yeah.
case. So if you have used
Oh,
your
yep,
KiwiSaver before to buy a house, that's it.
yep.
You're done. What the second chance
Right.
really gives you access to is back to that Kianga Aura product that we talked about. They would re-see you again under circumstances as a first home buyer again. But I'll confirm you do not
I
have
see.
access to your KiwiSaver a second time. Okay? Yeah.
I see. Yep, that
Yeah.
makes sense. Yeah, yeah. Okay, brilliant. So, and obviously you can handhold someone, or guide's probably a better word, guide someone through that process of unlocking their KiwiSaver if they need to
Yeah,
do it.
100%. They're very
Brilliant.
familiar with all of
Brilliant.
the sort of intricacies around it.
Yeah, fantastic. Because I think that's one thing that, as a first home buyer for myself years ago, it can be quite daunting. I mean, I consider myself a reasonably, smart person, but like anything, my knowledge and expertise was definitely not in that
Yeah.
area, and when you're doing it for the first time, it's quite a daunting
Yeah.
process. You're dealing with large sums of money, you're unlocking KiwiSaver and savings, and, it's I think, it can be, quite a journey.
Oh, I 100% agree. As a first home buyer,
Mm.
a lot of the time you can see that people are just overwhelmed with all of the facets. KiwiSaver
Yeah,
and part of your deposit and what the bank requires and do I need a solicitor and all the other things that come along can overwhelm the
yeah,
whole situation. We do break it down
yep,
into very easily understandable steps to buy a house. We pride ourselves on
yep,
that and insert people into that process as soon as we start the process with them. So it means that you just
yeah,
know what you need to know when you need to know it. You're not being trampled by
yeah,
absolutely everything at once and just, like
yeah,
you say, feeling a little bit,
yeah,
anxious about
yeah.
things.
Yeah. Oh, it sounds invaluable. And another option there that you've mentioned to me before is a deposit gift. So that's where dad or great uncle or great auntie might gift,
Yep.
20 grand, 30 grand, whatever or
Yep.
more, towards the deposit. How does that part work? And can you help guide people through how that could work for
Sure.
them?
So typically, like the Kianga Aura product starts with as little as a 5% deposit. Going directly to a
Yep.
bank means you really need at least 10% deposit. And then obviously the
Yes.
holy grail of lending is if you have a 20% deposit, you get all the discounts and cash back and all the love that a bank can give. Now, at times, as you sort of alluded to, you might not have enough savings and KiwiSaver and all the little facets that make your deposit together to get to 20%. So that's where family can
Yeah.
assist with a gift. And a gift in the law,
Right.
or the eyes of the law, means that one family member gives another family member some money to help purchase a house. And the gift means
Yeah.
it's a gift. It can't be seen as a loan. It can't be
Right.
repayable. So this money is there to assist a family member into a home with no need to
Yes.
repay that money. And it's really
Wow.
helpful. I mean,
Mm.
some people are lucky enough
Yeah.
to have
Yeah.
parents or siblings or, grandfathers or mothers or uncles or, that
Yeah.
are in a position that they can
Yeah.
assist in that way. So it's a pretty easy form
Yeah.
to fill out to say that, hey, dad's gifting me 8K to
Yeah.
make my deposit X
Yeah.
size. Yep.
And what about if they're not family? Like if it's just a
Yeah.
friend or a wealthy,
Unfortunately not. No.
Oh, right. Okay. Interesting.
The,
Yeah.
the belief from the gift is that, blood would help blood. So relatives, where, friends, there could be something else going on underneath the gift certificate, like it is secretly being repaid or something like that. So, unfortunately, it has to be family. Yeah.
Okay. That makes sense. Yep. Okay. Awesome. And then, talking about family, obviously we've discussed, off here with the podcast, and you've got some good content on it around a guarantor. So it sounds very similar to the gifting process, but there's some sort of guarantee or something in there. Give us a rundown on how that part
Yeah.
can work.
So again, it is a gifting type situation. Just it's where a family member, again, has to be a family member, has equity in a property that already exists, and they own, and they're just going to allow part of that equity to be used to increase the amount of deposit that the individual that's looking to purchase can use. What it means is that, say, mum and dad are going to offer a little bit of equity out of their home. It means that we have to complete a very small application over mum and dad to make sure if the kids fall over, it wouldn't make the parents fall over. And then the banks can say, oh, yeah, look, everything's good here. We can use a little bit of the parents' equity to assist in the purchase for the kids. Very common.
Right.
Just that extra little bit of work to done by the parents to make sure that, they're not going to be put into any kind of financial hardship. And from the parents' point of view, they're really only guaranteeing the little portion that's required to make it to a 20% deposit, where in the old days they were asked to guarantee the whole new loan. That got found to be completely unfair. So it's very fair now. It's if they needed, say, 20K to get into a property, they're only guaranteeing 20K. Yeah.
Wow. Yeah, that's awesome. I didn't know that. I was familiar with the old mechanism, but the new one, that's incredible. Yeah. So that frees up parents to just takes that whole pressure off, doesn't it? In terms of not having to guarantee the whole another loan, another mortgage.
100%. Yeah.
Interesting.
Yeah.
Wow.
We'd also find
really
ways
cool.
of structuring the loan for the kids to try and get rid of that, in that example, 20K a little bit quicker than the rest of the loan, so they can sort of ask the bank to remove the guarantees over the parents as quickly as they possibly could.
Yeah. Wow, that's amazing. And in your experience, working with hundreds of different clients, probably thousands over the years, is it generally one, out of these sort of options that you've covered off today, is it generally one or two, three sort of main options, or is it always a bit of a mix based on the person's need?
Well, because of the invent of KiwiSaver, a lot of first-home buyers now fly by themselves. KiwiSaver's just turned out to be one magnificent product when it comes to buying your first home. The younger people, or the people since 2007, have really gravitated towards KiwiSaver and man, has it come to support them in the need when they want to buy a home.
Yeah.
Look, the next most common one would be the gift. It does mean that, that the parents aren't guaranteeing anything. It's just a simple gift to the kids to go and buy their home. And then the guarantee would be the third most common way of going forward. Yeah. Yeah.
Right. Yeah. Interesting. Brilliant. Before we sign off, Scott, is there any other mechanism or way you can think of that we may have missed, that I may have missed, that people can leverage, or they'd be the main options?
Not really. They are the main options. Look, it's important to know in New Zealand that you can't get a loan to get a loan. I know that sounds weird, right? So
interesting. That's interesting. Right. Yeah. Like whack it on your credit card or something.
Exactly. Or, I always use this example because it exaggerates the heck out of the example, but you can't go to Westpac and get a 20% personal loan, go to ANZ and get an 80% home loan and buy a house, because now you've got a 100% loan, right? And then that's why, in essence, you can't get a loan to get a loan. And it's also why a gift assistance has to be a gift, because it's not a loan.
Yeah.
So that's a good one to cover off, actually, Joel. Well done.
Yeah. Actually, sorry, one other one that a friend of mine, this is a little bit left field and maybe maybe more for property investors, but what if someone had some gold, like a tangible hard asset, or even a bit of crypto, like Bitcoin? Because a lot of, younger, a lot of actually young, mid and old have all of those type of things. So how would what would be your advice in terms of kind of leveraging that towards a deposit or towards their home? How would they go about doing that?
It's a question that's asked more often than you'd think, actually. And the answer is not the one you want. And that is that, that is that the lenders will only use property as security. So the unfortunate scenario there is that you would have to turn your gold into cash or savings, turn it into liquid share to be able to use. And same with shares, same with, in the old days, we used to use very large term deposits, and they would lock the term deposit and lend against that term deposit because it was locked and the money couldn't go anywhere. That's also sort of gone by the by. So it has to be turned into liquid cash and used as money to make up the deposit fund. So I hear you, and it's a common question, but I'm not sure it's even a bank's thing. I think that's more of a regulation thing that has forced the banks down that avenue rather than the banks being a bit awkward.
All right, Scott. Hey, look, before we sign off, you've got to give us the secret sauce, mate. We touched a little bit on rates there, but I'm going to try and tease a bit more out of you. Where do you think rates are going with this next,
look, really good question. Funny you should ask, but tomorrow being the OCR announcement. I think we mentioned that earlier in the webinar, but look, in my mind, I think we're going to see another small drop from the official cash rate. Some of that might have already been priced in by the banks out there. We had some movements last week. Look, if I was personally doing my own loans right now, I think the 6-month rate is not competitive enough compared to the 1-year rate, and anything longer than 1 year is too long. And the reason why I say that is I don't want to be coming up for renewal of my term too close to the curve of an interest rate increase. And I think the 1 year next year will come out with enough distance between that curve for us to really plan on what to do to try and get through the next high of interest rates. So I think the 1 year rate's the sweet spot right now. Very competitive in price and not too long. That's the secret.
Interesting. Yeah, it's really good advice. Gives people that time period to not lock too long, but also have a bit of flexibility in a year's time.
I think if you did lock in longer than 12 months, you may find you're coming in past the point that rates have already gone up, and we just don't want to do that. We want to have time before that and then plan and scheme. Yeah.
Interesting. All right, that's really valuable advice. Just to sign off, Scott, I just wanted to reiterate to our listeners that, as you've heard today, Scott really knows his stuff. The company Advanced Mortgage Solutions, including Scott and his team, have 400 plus 5-star reviews, which is pretty incredible for any business in this day and age. So you're obviously doing something right there, Scott, which is amazing. And then also we're really proud, or Scott's really proud of the feedback he's getting on Reddit, because as we know, Reddit's can be quite a brutal and honest space where people look for reviews, and Advanced Mortgage Solutions have got amazing reviews there as well. So again, Scott, if someone's listening to the information today, they're a new home buyer, they need help, sort of understanding all of this, but they just want to get on the phone or get in front of you. What's the best way for them to book that time with you?
There's several ways, but the easiest way would be to just go to the website. I'm sure you can flash those details up a bit later on. And there's contact pages there. There's all our contact information on the website itself. And we can very quickly plug you in and assist with any of the questions that you might have for us.
Brilliant.
All right.
Thanks for joining us today,
No problem.
Scott. And we'll see everybody on the next
well,
episode.
Thanks, Joel. It's been a pleasure. We'll see you later.